So let's start today. It's going to be a very interesting webinar. Let's start already. It's time to start. This is who I am. Not very important. Really, let's look more at the content. Okay? So today, webinar. Very, very important topic today. Okay? Psychology is one of my favorite, most favorite topics in trading. Psychology, okay? But it's a very deep field, right? It's very deep. So let's try today. I'm going to try to put an overall perspective of what are the main difference between the professional trader versus the amateur trader. Okay? This is psychology today. This is the topic today, the main topic. Very, very important. So this is the today content, right? First, we are going to look at the main difference between professionals and amateur traders. Then we are going to look at how to have the correct approach, the mindset. Then I will try to give you some tools and exercises so you can try to improve your psychological makeup, your mindset on everyday trading or life or whatever you want to apply. And then we will go to a questions and answer session. Okay, so let's get directly to the point because time flies and it's a lot of content I have for you today here, okay? I will try to answer questions along the road, but try to backfire a little bit. So, let's look at sports, for example, okay? Any kind of professional field, you can translate to trading also, all right? So, let's look at the sports, all right? Do you see any differences? What do you think are the main difference that you see at a glance, all right? What? Which one? Okay. On the left, we have the professionals, all right? On the right, we have the amateurs on the sports field, okay? There is nothing good or bad or wrong to be an amateur, to have some fun, okay? But what are the main differences? Okay, let's try to think about it, okay? The professionals, they train more. That's like the first main difference that comes to my mind. They train more hours. Professional, they make a living out of it, okay? They train more hours. They put maybe more effort. They may not have so much fun than the amateurs, that they play a match once a week or once a month with their friends, not so, all right. What else, guys? I want you it looks like fun, like a lot, the photo on the right. What else, guys? What do you think are the main differences? Yes. Come on, guys. I want you to think, okay? Main differences. Anybody guess? There is one big, exactly. There is one big difference between them. Yes. All or nothing. Spirit. Well, spirit, it's important. I mean, but I think that is more with personal preparation. Yeah, that's correct. Training versus playing, strategy, discipline. Okay, there is one main difference between them. Okay, the professionals, they have a long-term approach. Okay, they think on the long term. Do you want to be a professional player the rest of your life, as long as you are in a good physical state, right? You want to make a living out of that. You focus on the long term. You think on the league, it's not one match. It's many games you want to win. The amateur is just having fun today. Short-term approach. I want to have fun today. right? I don't think in any league. I don't want to make $1 million being a football player. I don't want to. They just want to have fun with their friends, and that's all. Okay? So if you translate this into trading, it's okay. If you want to have fun trading, open a micro account, put $100, have some fun. That's okay. It's nothing wrong with that, okay? Most probably you are going to lose the money, but at least don't bet the house, okay? Or go to the casino, play blackjack, whatever. But if you want to be a professional on the markets, trading the markets and make a living out of it, you need to have a long-term approach. Amateurs usually think that they are thinking on the next big winner that is going to make them millionaire. Okay? The professionals, instead, they know that trading is something that is long-term approach. One trade means absolutely nothing. They live by a series of trades, not just one. They are not thinking on the big, today I'm going to become a millionaire today. No, it's not how it works. Okay? So this is a main thing. You can translate this into trading. Of course, there are many more different. They have coaches. They train hard. They train more hours. They are thinking about it every day. Preparation. They have strategy, training together. They have a team, and so on. Okay? So let's go to the next slide. So what I like to do is, instead of looking at the traders itself, at them, as the person, let's look at what we have in common. Everybody who trades have one thing in common. They put a trade in the market. So what are the differences between a good and a bad trade? Qualities of a good trade. It's planned. Usually, okay? This is not 100% always correct, but usually a good trade is planned. Okay? It's risk-wise. You don't bet the house in one trade because you are a professional and you know you live by many trades, not one. Usually it's with a trend. That doesn't mean that you cannot make money counter-trend, of course, but it's harder. Okay? So it's with the trend. It's no emotional, usually. Okay? No emotional, no fear, no greed. Okay? Qualities of a bad trade. It's impulsive. It's over risk, over leverage. You are risking more. You don't control the risk. It's a random entry. I feel good. Somebody tell me Apple is going to go up. It's random. You are not taking any. It's okay. Apple is going to go up. It's random entry. Okay. It's a bad trade. Not with the trend. Fear to miss. Greedy. Okay. These are like the main differences between good and bad trades. So let's continue following the line, no? Because if you put a trade, you are a trader. So looking at the trades, you are as good as your last trade. If you put a trade, you can know how good or bad you are. So now, what are the differences between a professional and amateur trader? Okay? Qualities of a good trader. They plan in advance. I'm talking about the person now, not the trade. The trader. They plan in advance. They do the homework. They don't go and I feel good today, my friend told me this is going to go up, boom, buy. No. They do their homework. They control the risk. They accept the risk and they control it. They follow the trend, usually, right? Because it's easier to make money following the trend. That's how it is. They have emotions under control. They have emotions under control. That doesn't mean, professional traders are also human beings. They have feelings also. They can have a little bit of stress. But they don't let the stress, neither the feelings to interfere with the trading decisions. They control them, and then they don't take a decision based on their feelings. They think long term. They think long term. They focus on the process. That's key. They focus on the process of actually good trading. They are not looking at how much, how, when, what. No. They are looking at, I am doing the process correctly. I am training good. I am doing my homework. I'm analyzing the markets correctly. I'm following the plan, and so on, so on, so on. So, qualities of bad traders, exactly the opposite. They trade impulsive. They don't control the risk. They don't have a plan. They don't follow the trend. They have fear to miss. They are greedy. Basically, they focus on the content instead of actually good trading. Okay? Any questions on this? Any idea? Anything you want to add? Anything you feel this happened to you at some point? You acknowledge something of this in your trading? Yeah. It's very important to think about this, guys. This happened to everybody at some point. Okay? Everybody who stepped into trading, at some point, they broke that. You make a trade because you feel that impulsive trade. You don't control the risk. You broke the rules. You are thinking on the money, not thinking on the process. Okay? So, main difference, focus on the process. Okay, we have a good question here from Ahmed Solman. How can you think of the long term if you are trading intraday? Well, intraday trading means you open and close the position the same day, period. It doesn't mean you are going to make all your winnings or your monetary income of the year in one day. You just put a weekly, monthly objective and just try to reach the objective, okay? But don't get crazy with goals. Just focus on the long term. Put, okay, the next 3 months, I want to make a 20% on my account. Okay, to make that, I need to make 20 pips a day, 30 pips a day. Make your projections, okay, but don't get crazy with them also, because the market is the one who is going to tell you how much is going to move. You don't know how much the market is going to move, okay? Intraday trading, 1 hour time frame. Well, it's great if you are happy with that, if you are having good results with that. Time frame, for me, it's as long as you follow the main trend on daily, weekly chart. If you want to entry on 1 hour, 15-minute chart, that's okay. But put your goals. What I want to accomplish this year. I want to generate 40% this year. Okay? You divide that by 12 and you put small goals. Exactly. So that has nothing to do with your intraday trading. You need to have a long-term plan. Also think about this. One trade means absolutely nothing, guys. Nothing. Nothing. Okay? If you are testing a strategy, at least make 25 trades with the same rules. And then you go back, look at the results you are getting, and think about if maybe you can change a rule, it will improve or not improve the strategy. But one trade is absolutely nothing. Doesn't mean anything. We, the professionals, as we are everybody here professionals, we are becoming professional and more professional every day here, everybody. The professional trader lives by a series of trades. Okay? Good. So now we are going to look at the emotional differences between a pro and amateur trader. As I said, the professional is process focused. What that means? That means that he's thinking how good I'm following the plan, how good I'm following the rules. He doesn't care so much about the outcome, okay? The outcome of one given trade. Of course, he look at results, but not in one trade, not in 1 week. You need to have data. You need to analyze. You need to have many trades to analyze them, okay? So they are serene and calm, confident and objective. They follow the plan. They control the risk. They stay focused. So the novice, in the other side, is content focused. He put a trade. He lose money. He's in pain. All right? He's making money. Oh, pleasure. Oh. Again, fear, euphoria. Oh no, it's gonna take my stop loss. No, please, no. Boom, fear. Oh, I'm making 200 pips today. Oh, I'm the best in the world. Euphoria. Okay, you are giving your power to the market. Who guys do you think have the power to control the emotions? I mean, who the market or you? I mean, it's yourself. Nobody and nothing has the power to control your emotions. Nobody. Just how you interpret things. The market is completely objective. The market doesn't know how much money you have on your account, doesn't know how much you lose or make today. The market doesn't know you. I mean, how is the market going to give you pleasure or pain? Okay? Exactly, Ivan, exactly. So, any questions on this? Anything you are thinking about? I appreciate a lot your feedback on this. Okay. Great. So looks clear for now, no? All right. Fantastic. We are starting to pinpoint the main difference. So let's move on to the next one. So now what is having the correct approach? What is the correct approach? The professional approach. Let's look a little bit more onto that. Let's move on. The most successful traders are so passionate about trading that they would trade regardless of how much money they made or how successful they were. For them, the intellectual and creative activities involved in the trading process constitute an optimal experience. They trade in a higher sphere, and maintaining this peak performance mindset ensures their lasting profitability. They believe in enjoying the process. They like trading. They like to look at the charts. They like to accept the risk, take the risk. They like the process. They enjoy it. That's one main difference. The novice in the other side is only thinking about the money. All right. About going to their friends. You know what? I make this amount of money this year on the best in the world. They don't trade for objectivity, for objective reasons. They trade for their ego. They trade for feeling better. That's very, very hard. It's a trap. It's a trap, okay? So peak performance mindset. The professional believes in himself. He enjoys the process. Emotions such as fear, anxiety, self-reproach don't even enter their conscious mind. The experience is so intense that they tend to be concerned less with the final outcome and more with the process as they experience it. It's what Mark Douglas says, trading in the zone, no? Being in the zone, being in the now moment. Being in the now moment. Okay? So, this is one approach, important, internal approach. We are talking about psychology. internal approach, the mindset. They know trading. What do you think, guys, is the most important variable in your trading success? What do you think is the most important variable in your trading success? Mindset, Frances, Joe, Eds, mental, mindset, discipline, risk management, self-control. I'm reading the answers. Patience, self-control. Yeah, all of this is it's great. But who control these things? Who do the risk management? Who do, So, what or who is the most important variable in trading success? For your trading success? You are the trader. You are the most important variable in your trading success. Okay? You are. It's not the market you trade. It's not how much money you have on the account. It's not the internet connection you have. Everything has something to do at one point or another. But I can tell you that if you don't have the internal mindset correct, you can have everything, but it's not going to make you more. Okay? You are the most important variable on trading. Okay, guys? And that's fantastic. Why? Because that gives the power to you. The power is within your hands. Okay? It's within you. Okay? It's inside you. Okay? So I don't want to hear any excuses, no, but the system, the broker, blah, blah, blah. No, there is no excuses. I don't want to hear any excuses. Okay? You are the most important variable in trading. Yeah, Pan says, you are a hard master. I mean, what do you prefer? A hard master that make you sweat, that make you exercise, and then you reach your goals, or you prefer a master that is laid down, back, and more chilly, and then you don't reach any goal. That's how it is. Okay, I want you to achieve financial freedom through trading, at least. I'm doing my best here, sharing this info with you. Ivan says, my cat stood on the buy button. Can be that an excuse? No, it's not an excuse. Okay? Because if your cat is in your trading room, trading office, it's your fault. You should have the door closed. Okay? It's your fault. All right. Great. Let's move on. So, Hadmek, Forex is a scam market. Why you trade that? Why? Why? Because you are not making money. That's the main excuse I hear every day. It's the main excuse. It's a scam. No, man. There is people making money. There is people making money every month, every year, consistently. So, don't fall into the trap of the excuse of this scam. No, it's a hard market. Forex is a very hard market. Why? Because it's a market of professionals. Who do you think is on the other side of the trade? Let's go back to the first slide. I mean, okay, let's imagine this is a trader, and you want to play with them a football match. Who do you think is gonna win the match? Who do you think is gonna win the match? Okay, who do you think is on the other side of the trade? A professional trader, an investment bank, a hedge fund, people who do their homework. Okay, there is no magic. Okay, so it's not really a scam. Please don't say that, because that you are putting negative emotions. You are putting negative into yourself, into your mind. So I'm going to share with you the 10 commandments, having the correct approach. These 10 commandments, I don't know why it's 12 here. It should be 10, okay? Never mind. 1, trade for success, not for money. Main thing. Trade for success, not for money. Strive for discipline. Know yourself and how well you handle risk. Some people handle risk better. Other people have problems with risk. Okay? Lose your ego. I'm going to repeat. Lose your ego. Okay? How? Very simple. Don't be attached to your trading account. You are not your trading account. Okay? You are not your trading account. So, when you have a fantastic year, don't feel the king of the world, the master of the universe, because if you do that, means that when you have a very bad year, you are going to feel like shit. So, yes. Good question. Can we be successful traders if we are not making money? That's a good question from Carlos, New York. Can we be successful traders if we are not making money? What do you think? I mean, why do you get into trading? If you get into trading to make money, then if you don't make money after X amount of time, then you are not successful. Okay? All right? But if you get into trading for I don't know, whatever, develop discipline, develop emotional control, whatever, okay? Micro account, $500, maybe you lose money, but maybe you learn something, okay? I will not say you are a successful trader per se, because you are not making money long term, but at least you gain something. Okay? Exactly. So, but short term doesn't matter if you lose or make money. 1 day, 1 week, 1 month. Doesn't matter. Doesn't matter. The important is the long term. Yeah. I don't know what happened with the numbers. Okay. 4, lose your ego. 5, forget all hoping, wishing, or praying when it comes to the market. That is how it is. The market is not going to change. If you start praying, something is wrong. Something is very, very wrong. Let your profits run and cut your losses quickly. Okay, this is a little bit vague, but that means if the trade is making you money, it's for a reason. Usually, it's a good signal. Okay, if the signal is still in place, let it ride. And the contrary, if you are losing money, I don't recommend you to hold the trade too much. Okay. Okay. Know your risk level, and when you hit your stop loss point, exit the trade. No excuses. No, my cat is on the room. Okay. No excuses. No excuses, Ivan. You don't start, because the mind, you know what? The markets are very volatile. But the mind is more. It's much more volatile, the mind, than the market. So when the stop loss comes, you move it. No, but I'm gonna, this happened, and you start making your mental picture, your mental movie, and you put excuses, and then instead of losing 50 pips, you lose 200 pips. And then you get crazy. Okay. Now when to trade and when to wait. That's also very important. Very, very important. Professional traders, they sit down, look at the chart, and think, okay, convince me. They think, market, you need to convince me to put a trade. You need to show me the rules. You need to show me there is an opportunity. If not, they just look at it. Trading is also trading. Sitting down, looking at the charts, and you don't need to open a position. That's also trading, okay? You are going to save a lot of money. Love your losers like you love your winners. That's how it is. Okay? Loss in trades will be your best teachers. Will be your best teachers. Because when you win a trade, you usually get lazy. You get more lazy. When you lose, you want to come back with energy. 11. After 3 losing trades in a row, take a break. It's important. And more if you are starting, you don't have too many years of experience. It's very important because you get on tilt. That is how we say it. You get on tilt, on fire. After 3 losing trades in a row, it's better to take a break. Because the markets are going to move forever. You're going to have more opportunities to trade tomorrow. Tomorrow the market is going to be there. Don't break any of the above rules. Okay? So, having the correct approach means that trading is not about the money at first. It's about discipline, organization, analysis. The main objective in trading is discipline. Money is a byproduct of these characteristics. It is a byproduct. So you need to forget a little bit about that at first. Don't worry. You are going to make money if you follow the plan. Don't worry. You are going to make... Think about a professional football player. They want to be... Yes, they think about the money a little bit when they were child or whatever. But then they forget about it. They go to training every day. Hard, boom, 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 training. And this is very important. Okay? Why? Because money can distract you from what is important. So, when in the future, when you start making money, it's like a test. Hey, don't get distracted now. Forget the money again. Focus on the process. Follow the plan. Follow the rules. And control the risk. And the money will come alone. And then, when it's the moment to have fun, of course you go and have fun. Exactly fun. You only lose if you give up. Don't give up. I know people who have been trying to make a living from trading 8 years. For example, 8 years trying to make money out of the market. Not consistently making money, losing money. 8 years. And at the end they get it. They get it at the end. Persistence pays off. Persistence pays off. So, next, some tools and exercises for you. Ivan says, to be honest, I think the difficult part is having confidence in the right plan. Discipline is easy when you are confident about the plan. That's how it is. I agree with you. So, very easy. Test the plan before putting your whole capital at risk. Test it on demo. Do 25 trades on the plan. Test the plan. Do 25 trades. Look at the results. Change one rule. Do another 25 trades. Find something that is going to make you money. Find an edge. There are very simple edges out there. There are here at FX Street. Every day there are webinars, people who are giving you a lot of very good signals, very good systems you can use. Support, resistance, whatever. Find an edge, put the rules, then after you have some results, you put the money. That's true, Cano. That's true. Neil, the people, can you hear me? Somebody has no sound here. Neil, McNeil. Okay. Cano says, I have seen quite many emotional traders even among professionals. That's true. That's true. There are some professionals that are still emotional. But Depends on the trading style, depends on many things. You can be emotional, but you can trade successfully, okay? This is hard, okay? But you need to have many years of experience to say, I'm feeling this is going to go up, and then you buy, and then it's going up, okay? You need to be on the zone for doing that. Exactly. Cano and Peter, very important point. What do you think? Everybody, I mean, I'm not a robot. They are not a robot. Everybody have some degree of stress and emotions, but they don't let the emotions to interfere with their trading plan. Exactly. So don't get me wrong. I mean, everybody has emotion. Everybody, it's how it is. Okay, but professionals know how to use them. They are feeling bad, and they suddenly, they identify the emotion. They identify in their mind, and they say, I'm gonna take a break, because I don't want to. I see that I'm getting on tilt. So, but guys, see you tomorrow. Bye. But the novice bet the house, broke the rules. That's the problem. So, tools and exercise. How can you trade better? Plan better. This is an example of the kind of papers they give you on the banks, on the trading firms, proprietary firms, etc. They give you this in the morning, okay? This paper. They give you this in the morning. You need to do your homework. You put the technical levels. You put the fundamental news for the day, the expectations, last news, levels, patterns, what I expect for today, what actually happened, conclusions, results, and so on. Okay? Think about the first slide of the football players, professional versus amateurs. Amateurs finish the match and they go to the bar to take some beers. Professionals finish the match and they go for a 1-hour review of the match with the coach to see how you can get better, how you can improve, and so on. Okay? And this is a real paper they give. They gave, okay? The proprietary firms. Have a journal, take notes of everything, and review it. If you don't have data of your actions, it's going to be much more harder to improve your trading skills. Okay? Questions to be disciplined in execution. Are you mentally prepared to put on a trade? This is very important. I mean, if you are having, I come back to the same thing again. Like, how are you feeling today from 1 to 10? If you are feeling like shit for whatever reason, don't even open the computer. Don't even turn on the computer. Don't trade anything. You need to have your mind clear of distractions and be ready mentally to put on a trade. Exactly. Is your trade based on support or resistance or other technical levels of the market? That's important. Don't trade randomly. Okay, have a reason. I'm gonna risk X amount of my capital on this trade because the price is breaking or doing whatever on this technical level. Have a reason behind the movement, behind the trade. Have you confirmed the importance of that price level by watching the market behavior? Look at the left. What happened at the last time? Okay? Markets are made of people with their emotions. Do you know what your profit level is? Can you explain why you will exit your trade there? Okay? It is based on a technical level, or you are going to exit because you feel good. All right? Do you know where you will get out for a predetermined loss in accordance with your risk-reward ratio? Very important also. I am going to close the trade because I feel that I don't want to lose more money or because this technical level is being broken. Ask yourself this question. You want to be disciplined in execution. Do you know how large a position you will take on this trade? Think about that before pulling the trigger. Think about that before pulling the trigger. Okay? So take note of them. View the recording after if you miss something. Put a plan. Look at your plan. Look at your results at the end of the week. Do your mental inventory in the morning. How I feel today from 1 to 10. Okay? And why? I am committed to follow my plan, and so on. So let's go to questions and answers. We have like 5 minutes or so, something like that. Now is the moment to ask me anything. You can ask me whatever you want. What do you think about this, guys? Yeah, thank you for that. Thank you. What is my trading plan? We will need more webinar for that, Ivan. My trading plan is, yeah, thank you. Thank you. If you like this topic, please send us an email, to FX Street. We will do more webinars about psychology, okay? How do you select your trades? I look at the market and define areas to make business. But before the head of the barrel, you do this the weekend, or you do this in the morning before the session opens, and you say, if the price go here and here and here, or here and do that, I'm going to risk this, I'm going to put my stop loss there, and I'm going to take profit there. Period. I don't need to do anything else. Philip, I will love to show you how to trade the market, but today it's gonna be hard, okay? It's gonna be hard because I have 2 minutes, 1 minute left. BSA, Ivan, what do you think is more important? 5-minute candle, no supply, or monthly chart uptrend? What do you think the people is gonna view more? What is more visible on the chart? Carlos, I have heard that one should only trade money that one can afford to lose. If so, then surely there are only a tiny number of people with P&O to consider trading. The thing is, you can start slowly. You can start with a small account, but it's going to take time to buy long term. Suman Rashid, thank you very much. I like that you like the webinar, and if you like the psychology, I'm going to suggest more psychology webinars to FX Street. I don't have a profit target intraday, Pista. It took me around 2 years to be profitable, FT. But I'm talking about 10 hours a day working. 10 hours a day was I was reading the markets every day. 2.5 years to be really profitable. 3 years to be confident. What is the weight percentage for you between technical analysis and fundamental analysis? That's a hard question. I think like a fundamentalist, but trade like a technical. Okay. Okay, guys. Thank you, FX Street, for having me here today. Thank you a lot for you to share this time with me today. Thank you again to you guys. You can send me any questions to my mail. Add us on Skype. Visit us. Feel free to come to the webpage. Send an email. Has been a fantastic time. Thank you again, FX Street, and thank you for you guys. See you on the next webinar. We are going to talk about price action. Have a nice day, everybody. Thank you a lot. Bye, bye, bye.